Two worlds, tale of two cities.
Yeah.
And it really is a difference between whether you have a lot of cash, a lot of assets, particularly if you have a home and a mortgage, a fixed rate mortgage, versus being a renter. And there's even a difference in wage growth, because we talk about the unemployment report coming out last week, and that wage growth has been outperforming inflation for almost 12 months now, where essentially we're getting like 4% wage growth versus 3.5% inflation.
That's interesting.
So like just eking out.
If you're Joe Biden, the impact isn't there for you yet.
No, and one, it's because it's really close.
It's
It's half a percentage each month. But when you delve down into it, that wage growth frequently comes from higher earners on the higher side versus the lower wage growth. And also when it comes to inflation, those that are most affected by inflation are renters, because they're seeing a bigger increase in their rent, their housing costs, which is often one of your biggest costs, not just your eggs and your milk, but that big check.
But how long can this go on? I remember you have a dichotomy of this size. Now we saw it in the Reagan boom when it was beginning to peter out. That even the well-to-do would start dialing back in the end. Now not to the point where they quit.
Right.
But even they had tethered to a rope that was getting tight.
Right, and that's super interesting, because we're starting to see the cracks appearing, and we're seeing it in basically people are starting to spend less. We're seeing a massive pullback in basically consumer durables. So people aren't buying new roofs, they aren't buying new windows for their homes, that type of thing, big ticket items. So while we do see there's still a lot of spending on vacations, but we are seeing cutbacks and people shifting from, let's say, the more expensive makeup brand to the cheaper makeup brands, and that kind of shift. And that's across the board when it comes to the American consumer.
But normally when you see that, the reason why I'm mentioning it, do you see that when people, let's say there's this other trend going on among all groups, that they might eat out less during the week and save it for the weekend or whatever. I don't know how reliable that is. But is this the kind of stuff you see before a substantial slowdown or just a hiccup?
So it can be both, essentially. It could be a hiccup, it could be a slowdown. And so we're seeing a softening, but we're still strong. And so when that softening becomes that catalyst of going from a softening in a strong economy to actually softening enough that we're no longer a strong economy. And that's what we're all sort of waiting around to see. So we're watching those signs and saying, yeah, there's definitely signs of weakness, but right now we're able to withstand it. But certainly there are a very large portion in this economy that they already are at the breaking point.
But if you're the Federal Reserve and seeing the spending you are on the high end, is that enough to give the Fed pause? Because they say, I'm sure Jerome Powell can see what's happening at the lower end, but if it's not on the upper end, I don't want to make a move on this right now because that could be inflationary.
Absolutely, and it could make it worse. And so I think really from the unemployment report on Friday, that really is signaling that the Fed shouldn't make a difference, shouldn't change anything in September, that ultimately the economy is strong enough and broad enough.
Do you see any cut this year?
I have been saying no for a long
Yes,
time.
you have.
I know I'm an outlier, but I don't think we're going to see any cuts this year. I just don't see it.
All right. Always good seeing you. Erin Gibbs on that. We'll follow this as this dichotomy.